Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, August 31st, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the ES in the daily time frame here. What you'll see is price has continued to push higher throughout the month, and on the last trading day of the month here, we are trading at the highs already. And right now, again, from the very beginning of August, we have trended higher tremendously, and right in the middle there was, a little bit of a compression phase followed by further expansion, and now we have a higher value relationship from this month's pivot range into next month's range, which means heading into September, any pullback could still be a buying opportunity for a continuation higher, unless there's a failure to hold 3,400 or this previous month's midpoint, which is currently 33.89s. A failure to hold that zone could open up a broader pullback into the previous month's low next month. But right now, again, finishing higher at the end of the month and keeping an eye on the current month's high and close as we head into September, because a rejection of those prices in either direction could lead to the next nice move. But right now, again, given the overall trending behavior here, any early pullback next month could still be a buying opportunity until proven otherwise. All right, let's take a look here at the NQ. You'll see the NQ here is currently holding at highs. One thing that's you're seeing at the moment is a bit of a rejection of 3-day highs. So you can see 3-day highs are about right there, price pushing through those highs and then falling here. And if you look at the 15 or 60-minute charts here, or even the intraday charts, there's a bit of a range that is formed at those highs, followed by a pullback, and now back below the previous session's high. So right now, an early indication of weakness here. And if this starts to turn into a more bearish day, what you're going to see is price take out the previous session's midpoint and low, and perhaps there could be an outside day down, at least briefly. So right now, again, very, very bullish overall trending market. Every time price is pulled into the PIMA trigger zone, it's been a buying opportunity so far. Right now, we're stretched away from that PIMA trigger zone. So if we do pull back, again, into this pivot range next month, that could be a buying opportunity until proven otherwise. Again, we've continued to say that since the March lows, and it's been very, very useful for us. And right now, we'll continue to see how this develops here heading into next month. But right now, keep an eye on the previous session's high here, previous week's high. That's around 12,046. Any failure to really find acceptance above that zone could pull price back below 12K, even a little bit here. Anything into 11.8 or below could be a short-term buying opportunity. All right, let's take a look now at crude oil. Right now, crude oil is up about 0.9% and is currently holding right around the 43 to 43.5 zone again. This has been a zone that has continued to be in play, these 43s, and look how often we've tested it over the last couple of weeks. We continue to hold in this very narrow range here that has developed over a 15 and 20-day period compression, and right now that compression is building that energy for that next big move. And again, if they find acceptance through 43.5s, it opens up some upside here. And any failure after an attempt to break higher, any failure or rejection, could easily swing this thing back toward 41s. Any failure to hold 41 overall opens up more downside in the near term. But right now, this market has been a compression market at highs. Again, the safest bet is to avoid the chop until this thing is ready to move. So right now, fading the edges at the day's highs, at the day's lows, are the best opportunity right now in a trading range market. All right, let's take a look lastly at gold futures. Gold futures has traded in a range as well, has built up a pretty significant energy building phase here that you can see like that. After this strong low right here, we've never really come back to test it. Instead, we've sat around the 1920 zone several times and have held. And so right now, this range right here again is building the energy for the next big move. If it's to the upside, we know we have targets at 2200 and 2300 based on the key range here. So based off of this impulse sell-off and this key range, if we were to break to the upside, we have targets at 2200 and 2300 that are very reliable here. Any rejection at 2100 or 2089 could open up a return back down. So we continue to trade inside this range at the moment with an upward bias. And so right now, building energy until this thing sees that next phase of expansion. Of course, any failure to hold the 1900 level here could open up some downside, which could take us quite a bit lower into the previous month's low, 1767s, and perhaps even below that. But right now, this market remains very strong, and the LVN that continues to be seen here around 1830 continues to be the LVN to watch. Any test into that zone could still be rejected for a buying opportunity. All right, that is it for now. We'll see how this develops heading into the rest of the session and the new week ahead. Good luck, trade well, and I'll see you in the trading room. Take care.